Welcome back. We've got Chakri Lokpriya with us this morning. CK Kunal also still with us. Chakri, it was a good day yesterday. We're hoping that we'll see another one today, and that we somehow found stability in sort of at this range really for now. Pharma seemed to stand out. We were discussing some of those stocks in great detail from a valuation point of view, taking advantage of what we're seeing on the currency, PE multiples. Would you agree? And if so, from within the basket, would you be focusing on the heavyweight names or some of the other names as well that have been showing strength, the likes of Cadila, for example?
Yeah, pharmaceutical as an industry, is coming out of the FDA issues of the past. And it's so timed with the coronavirus. So against this backdrop, we have a few companies like Dr. Reddy's with a very diversified basket of products and with a broad range of US approvals. And so companies like that, Sun Pharma will do, Cadila will do well. And also given that their valuations are not expensive, in other words, they're actually quite attractive, with fairly visible earnings growth, a rarity in current times. On the other hand, you have domestic pharmaceutical companies, largely domestic like Ipca, again, valuations very attractive and growth fairly visible. And in an environment where growth is priceless, I think this sector will continue to do well.
Okay, so that's on the pharma pack. What about on some of the metal names as well, Chakri? Traditionally, of course, very volatile, but given the global environment right now, and we did see that slight bounce back coming in on, on those names yesterday, even though the whole market was moving. But nonetheless, plenty of factors that seem to be pointing towards some move there.
Metals are basically, as we know, are very cyclical in nature, and it largely depends upon economic outlook. And today you have global economies in sync facing the coronavirus, and as a result, economic activity is down. If you look at commodities, if you look for demand for instance, oil in India is down about 30–40% just in the last 1 month, not surprisingly. And so have the demand for other commodities, including metals. Now, how soon this quickly comes back depends upon two things. One, globally, is there going to be some kind of a slowdown in the virus curve, flattening out? And in India, when is it going to peak out? By current estimates, it looks like it is going to be probably sometime in the first week of June when India expects a flattening out of the curve. Now, as and when that happens, and if it happens as forecasted, then you can get into some kind of forecasting. Right now, forecastings are a bit too, up in the air. And valuations are also not important for metals. Yesterday, what we saw was a reflation trade on a hope expectation that the curve is flattening out. So I would still wait it out. For a positional trader, yes, they look attractive, but from an investment, you would still need to wait by the sidelines.
Chakri Lokpriya joins us now. Chakri, what is in store for us? Yesterday was a bumper day, more like a grand rally. Do you think we are likely to build on, or are we likely to consolidate?
It's tough to call a trend because we still don't have a trend, and the valuations notwithstanding. I think what is important is to see some kind of stability in new infections, because now businesses have come to a standstill. And also second is, for the market, is some kind of a policy announcement. There are talks that the government is readying together a package for various sectors. And so the contours of that will also define the next leg of markets from here on.
Okay. Chakri, Morgan Stanley believes that Reliance is a great company. They feel that even if the asset sales don't go ahead, the stock becomes a buy. Do you think after a 10% rally yesterday, and given that right now crude prices have declined and there is going to be no certainty on where the Aramco deal is headed, will Reliance qualify as a buy?
Yes, Reliance qualifies as a buy at current levels because all their businesses will do well, are continuing to do well. Even with oil prices at current levels, given that they have one of the most complex refineries in the world, it's just a question of maintaining the spread or having a spread better versus competition. which with its complex refineries, Reliance can afford to do that. Second, Jio is continuing to fire on all guns in terms of both subscriber as well as trying to improve its profitability. And third, the retail business continues to do it. So the valuations hold up. Yes, there was a certain amount of premium attached in the past month that is in the month of February, where during the Aramco deal talks time. But as and when that, clearly the Aramco deal now in the current world, or even for BPCL for that matter, the valuation parameters are likely to be much lower, given that valuations itself for not just the sector, but also for the overall market, both India and globally has come off. So then it becomes a question of timing. The Aramco deal, do they want to do it now, or do they want to see where oil prices stabilize at before penning the deal?
The flavor clearly seems to be pharmaceuticals, and if Trump is to be believed, it seems that we're going to be lifting that export, not really ban, but curb in the sense of hydrochlorine. And that really is bringing a lot of excitement all around the pharmaceutical sector. Where within pharma do you find comfort, Chakri, of buying afresh?
Buying afresh, I think would buy the more of the same names, that is which we have been buying. Is Dr. Reddy has a diversified basket. Valuations are fine. IPCA has both a domestic presence, which is good. Torrent Pharma company valuations has not yet run up. Glenmark, while still has some execution issues, the valuations are really attractive. And so these are the names that we would clearly focus on. And we would also focus on some of the hospital names like Apollo, which have corrected. And they are, as a business, are continuing to execute fine, and their capex requirements are likely to come down in the coming periods.
Okay, just gearing up for the pre-open rates, and that's what the rates are indicating, about 0.7% higher. No, we're not going to see another day like yesterday, today. But yeah, the fact that if we're just able to hold on to those levels that we closed at, that should be comfortable enough. So that's what the pre-open rates are indicating, while the SGX Nifty is indicating a bit of a negative start, lower by about 2%. The pre-open rates are indicating a mild bit of upside for us. Let's see which way we actually head. The big movers from yesterday, of course, were pharmaceuticals. Metals came back with a vengeance. Your Jindal Steel, etc., were holding out very well. Oro Pharma, Axis Bank, IndusInd Bank, they all held out very smartly. In fact, IndusInd saw a solid 23% kind of move. You had Axis as well, which held out by about 20%. Oro Pharma made a 17.5% move. So just some of these names is what you're going to look out for. Though right now you're not really quite seeing those rates getting replicated. Kunal, just that one trade, if you had to pick out within pharma, healthcare included, which one would you pick out?
Well, I'll definitely go for Dr. Reddy or maybe a Divi Slab. I think either of the two. It depends on the kind of style and strategy which traders would look at. So if it's more of momentum buy, then why not look at Dr. Reddy even at current levels, because that's the first one which has shown signs of strength. It's the leadership quality which Dr. Reddy has shown in terms of the price patterns. Divi Slab also is the other strong candidate for a breakout. It's been trading quite a while in a range, I think almost 2.5 or 3 weeks. So when most of the other pharma stocks have rallied and moved up significantly higher, lagging behind, but the charts are still very positive for Divi Slab. So if I'm looking for a breakout or some sort of a catch up in terms of where the pharma stocks have rallied, then I believe even Divi Slab holds a lot of positivity. I think at those 2060-70 levels where it closed yesterday, there could be an upside of almost 120 rupees on the very near term.
Here's what Rajiv Bajaj has to say about the impact of COVID. He's saying that they will have to sell ourselves out of this crisis. He's saying that he's reviewing the capex budget which is going to be put on hold. He's saying that the marketing budget is going to be reduced to virtually zero. He's talking about the days to follow the COVID-19 and how businesses are going to really be able to, pick up the broken pieces and get back on track. And talking about his business, Rajiv Bajaj is also saying that the interest waiver of dealer credit is going to be tempered. Wages are going to be cut across the organization and not affecting job cuts. They intend to honor all supplier payments at this juncture at least. So a pretty harsh an outlook, but it seems that that's going to be pretty much the reality. In fact, talking about the world post-COVID, let's also hear out what Jim O'Neill had to say about where he sees the markets and the economy is headed.
Well, it does look as though the markets have settled into a pattern of trading the infection curve in the most developed countries. And it is very gratifying that in the past few days, both Italy and Spain, that of course have been the epicenter of the crisis in the developed world, look as though they've gone past the peak. And obviously that's important in itself, but I think it's also important because it sends a message to everywhere else that is behind, possibly including places like India, but certainly the United States and the UK, that you can get on top of this battle pursuing some version of what Spain and Italy have done, which gives an additional example to the many countries in North Asia that were earlier in the fight against this and seem to have got this thing under control. So I think it makes quite a lot of sense for the markets to have recovered in the way they have the past 24 hours, because it suggests that there is some end, at least to this stage of the battle against COVID-19.
Jim, the fact that the British Prime Minister Boris Johnson has not recovered at all, what do you think it means, A, in the way how the political things would move, and B, how should one now view this in terms of the news on the virus?
So, as I think many fellow cabinet members have said in British media this morning, obviously it is very sad that the Prime Minister is seemingly not well for himself, his family, and for the country to have the Prime Minister in this position. But it is also true that it demonstrates to everybody here in the UK, if there was any doubts before, just how dangerous this disease is. And it should reinforce the message of the importance of where it's possible, that social distancing is important to get the...
Okay. Chakri, comment on IndusInd Bank. What is going on? Now bulk deals have started. The Citibank, the Citibank problem is also over. Do you think IndusInd Bank, which is now trading at less than 2 times book, it's a private bank, becomes more like a value buy, it becomes more like a go-to stock?
I think for IndusInd Bank, the next data point to watch is when RBI gives them the go-ahead for the promoters to infuse capital. And second would be the raise of the confidence capital of roughly about anywhere between $500 million to $700 million and the timeline of that. I think these two measures are important, that it does not lead to some kind of a crisis of confidence in terms of a run on the deposits of the bank, which is usually a precursor to the health of the bank. So the valuations are very attractive, but I think these two data points, one needs to wait before committing further capital to IndusInd Bank.
Which is your current holding, Chakri? Are you sitting on cash, or are you looking at encashing this rally? What's your strategy?
We are in cash. We are roughly about 20-25% in cash, depending on the fund. And clearly, we are participating in the market, and this is more a stock-by-stock approach, because, at this point in time, clearly earnings are not so important in terms because earnings forecast itself will be significantly downgraded for various sectors. If you take, for example, infrastructure as a sector, a good amount of the earnings cut will probably be north of 50%, 50. And this is for FY21. 2 quarters are almost gone. And so then what is a value buy from a valuation perspective holds good only if the next 2 years' earnings provide some kind of a basis on which we can forecast out into the future. So that is clearly at risk. And as we will see in the coming weeks, there's a significant amount of earnings cut. So then only like a value, pure comfort in the size, for instance, you take an SBI or even an ICICI Bank. Now, these are companies where, valuations are very cheap, but let's assume that the GNPA conditions change because of Corona, i.e. they show an increasing trend. Even then, these banks are big enough, strong enough to withstand the crisis, and those are the kind of companies who can ride through a long cycle of uncertainty are the ones to invest in.
Okay. Chakri, thanks for joining us this morning. All right, let's keep it with Zeke and Kunal as we just count down to 3 minutes to go. Kunal,